December 5, 2017, the CEO of a $20 billion company sent a two-line resignation letter to his board. No phone call, no press conference, no explanation. Just two words: accounting irregularities. By that evening, 200 billion rand had vanished from the stock market, and 1.7 million South African public servants had no idea their retirement savings had just gone with it. This is the story of Marcus Joost and the phantom empire he built over 8 years. To understand how this happened, you need to go back to the beginning. Steinhoff was born in Germany in 1964. Bruno Steinhoff, a furniture trader, started the company moving cheap goods between Eastern and Western Europe. Simple business, honest business. Nobody had any idea what it would eventually become. Marcus Joost joined in the 1990s as a young accountant from South Africa, sharp, aggressive, and obsessed with deals. He had one big idea. What if you could build the IKEA of the world, but for the discount market? Not luxury furniture, not premium retail, the stuff that regular people in France, Poland, Australia, and South Africa actually buy. Cheap, functional, everywhere. So Joost started buying Conforama, one of France's biggest furniture chains; Poundland in the UK; Pepco, a discount fashion retailer across Eastern Europe; Pepcor, a massive retail network across Africa; and then, in 2016, the crown jewel, Mattress Firm, the largest mattress retailer in the entire United States, 3,500 stores. In 1 decade, Joost had turned a small German trading company into a global retail empire operating in over 30 countries, with a valuation approaching $20 billion. Steinhoff was listed on both the Johannesburg Stock Exchange and the Frankfurt Stock Exchange. South Africa's biggest pension fund, managing the retirement savings of 1.7 million government workers, held roughly 10% of the company. At Davos, the annual gathering where billionaires shake hands and congratulate each other, Marcus Joost was a regular. He collected honorary degrees. He funded racehorses. He was the poster child for African corporate ambition going global. And the numbers always grew, quarter after quarter, acquisition after acquisition. For 8 consecutive years, the books looked perfect. Revenue up, profits up, expansion on schedule. The auditors signed off every single year. Analysts praised the strategy. Institutional investors piled in. Nobody asked the obvious question: where was all this money actually coming from? Here is how the fraud worked, and it is simpler than you think. Joost, along with a small circle of executives, created a network of companies that looked like independent third parties. These companies had names, addresses, and bank accounts. What they did not have was any real business. They existed on paper. That was the point. These shell companies would send invoices to Steinhoff. Invoices for consulting services, for intellectual property, for management fees. Except none of those services were ever actually provided. Steinhoff would pay the invoices, then record that payment as legitimate business income on the other side of the ledger. The same money goes out and comes back in, except now it is dressed up as revenue. Think of it like paying your friend $20 to mow your lawn, then telling your bank you earned $20 from a landscaping contract. Multiply that by 6.5 billion euros. Over 8 years, the result was that Steinhoff's financial statements showed 6.5 billion euros in income that simply did not exist. Asset values were inflated. Loans were shuffled between entities to make debt disappear from the books. And Joost himself? He was quietly funneling money through the same network into personal trusts and accounts. He was not just lying to shareholders, he was robbing them. This did not start as a massive criminal conspiracy. It probably started small, a deal that needed to look slightly better than it was. A quarter where the numbers needed a little help. But then the company kept growing, the acquisitions kept coming, and every lie required a bigger lie to support it, until 6.5 billion euros of fiction were holding up a $20 billion empire. The first public warning came in 2015. Germany's Manager magazine, a respected financial publication, published an investigative report questioning Steinhoff's accounts. They pointed to suspicious related party transactions and raised doubts about how the company was booking income. Investors shrugged. Analysts dismissed it as competitive noise. Institutional funds held their positions. The stock kept climbing because the narrative was too powerful. An African company conquering global retail. A genius dealmaker defying gravity. Who wants to be the person who questions that story? But inside the company, something was breaking down. Joost had a business partner in Europe named Andreas Seifert. Around 2017, their relationship turned hostile. And a man who knew exactly how the machine worked started talking to regulators and journalists. At the same time, Deloitte, Steinhoff's long-term auditor, began asking harder questions about the 2017 financial statements. Joost could not answer them. Deloitte refused to sign off, and that refusal was the one crack the entire structure could not survive. December 5, 2017. Joost sends his resignation letter. The board announces an independent investigation. The stock opens the next morning and does not stop falling. In 2 days, Steinhoff lost approximately 90% of its market value, 200 billion rand. Gone. Traders who held positions overnight were financially ruined before they could exit. Christo Wiese, Steinhoff's billionaire chairman, personally lost approximately 59 billion rand in a matter of days, one of the largest single personal wealth destructions ever recorded. South Africa's government employees' pension fund lost 20 billion rand. That is the retirement savings of teachers, nurses, and civil servants. People who had nothing to do with Joost, his shell companies, or his deals. They just trusted that their pension was safe. PricewaterhouseCoopers spent years on a forensic investigation. Their conclusion, released in 2019, confirmed $7.4 billion in fictitious transactions. Steinhoff formally entered liquidation in October 2023. In March 2024, South Africa's financial regulator imposed a 475 million rand fine on Joost personally, the largest individual penalty in the regulator's history. Days later, with criminal arrest imminent, Marcus Joost shot himself at his coastal home. He was never tried. He never faced a jury. He died as the architect of Africa's largest corporate fraud, with no criminal conviction ever recorded against his name. So what does this case teach us? Because if you are an investor or building a business, there are 4 things here you need to carry with you. First, complexity is a weapon. When a company operates through hundreds of subsidiaries across dozens of countries and even professional analysts cannot follow the money through the annual report, that is not sophistication. That is camouflage. If you cannot understand where the revenue comes from, do not invest. Second, auditors are not your safety net. Deloitte signed off on Steinhoff's accounts for years. The lesson is not that auditors are corrupt. It is that long-term auditor relationships create blind spots. Always check how long the same firm has been signing off on a company's books. A decade of familiarity is a risk, not a reassurance. Third, when investigative journalists raise accounting questions, take it seriously. Manager magazine flagged Steinhoff in 2015, 2 full years before the collapse. The information was public. Read what the regional financial press says, not just the analysts who profit when the stock goes up. Fourth, pressure creates fraud. Joost was not born a criminal. He was a deal maker who got addicted to the story he was telling. When the real numbers stopped cooperating, he chose fiction over honesty. If you are building a company and you feel pressure to make the results look better than they are, that is the moment to stop, because the alternative is not a cover-up, it is a countdown. The next fraud is already happening somewhere. Subscribe to Capital Sins so you catch it before the crash. And if today's case taught you something, hit like. It costs you nothing and it keeps this investigation going. On screen right now, you will find the story of Bernie Madoff, the man who ran the biggest Ponzi scheme in history, right under the nose of every regulator in America. Click it. You will not regret it.